Hello everybody, today we are doing something different. I have a special guest here for you and it's going to be a treat talking to him. Puneet Chaudhary from Executive Mortgages. He's a mortgage specialist and a close friend of mine. First of all, Puneet, welcome to Calgary.
Thank you, Jaskaran. Thank you for having me.
It's a pleasure having you here. So Puneet's flight is in a couple of hours and we thought we'll do something informative for you guys. So Puneet, there's a question I get asked a lot. The interest rates are going down, which is good news. There's a downward trend, but the house prices haven't gone down. What's going on with the market right now? So why aren't the prices going up, especially in Ontario? Why is market still not moving?
So I would say, Jaskaran, that's a big myth in the market that interest rates are direct related to house prices. Pricing or the value of the homes would depend on one factor, demand and supply. Interest rates are not exactly related to house pricing. Sure, they make a difference, but they're not directly related. When you saw interest rates were going up, demand went down, and that's why home prices went down. So when interest rates were going up, we saw that demand was less, and that's why house prices were going down. Now, when the interest rates are going down again, it's more of the market sentiment that has been down, and that's why demand and house prices haven't come back to the same level. So it's not always the case where if the interest rates are going down, it'll automatically drive the prices up. That's not the case.
That makes sense, because for the longest time, the interest rate used to go down, prices used to go up. So we got into that impression that this is the trend, when the interest rates go down, house prices shoot up. It's a very good point that the overall sentiment is down. We hadn't seen that in the past decade in Canada. So never really realized that overall sentiment makes a, impact on the market as well. That brings me to my next question. Why do you think overall market sentiment is down?
I think consumers lost confidence after the interest rates went up. When the Bank of Canada governor comes to TV and tells you that interest rates are going to remain low for a long, long time, and we saw an unprecedented level of interest rates being low. I think you're looking at about 1.35 to even 1.5%. Suddenly, from peak low, they jumped to peak high. You looked at 6.5 to 7% interest rates. So when the Bank of Canada governor comes on TV and tells you that the interest rates are going to remain low, and they don't. So I think that's one thing. Immigration is also contributing considerably to this. We had considerable immigration happening in the last 4-5 years. The government of Canada has now stopped immigration considerably. I wouldn't say stopped. I think they've reduced immigration. So now it's much more controlled and they're having less immigrants come in. So that's the other reason as well.
How's the overall market in Ontario right now? I know you guys had a tough time over the last 2 years. Do you see it becoming a little bit better? Is there something positive coming, or is it going to be like this for the foreseeable future?
Well, I would say that people who are genuinely interested in buying as an end user, I am still seeing a lot of transactions happening in that segment. I think mainly investors have been out of the market right now for a while, and the reason that I see is that despite the interest rates coming down, I don't see, even despite putting even 20 to 30% down, if you're an investor, you're not seeing rental covering your mortgage payments, right? There's a considerable deficit in the mortgage payments. So if, let's say as an example, if you have $1 million house mortgage, $800,000 mortgage, you're looking at about $4,000 worth of mortgage payment. Rent for a property that size would be about $3,000. So you're still $1,000 out of pocket, plus property taxes, plus insurance, etc., maintenance. So you're about $1,500 to $2,000 out of pocket. So that's where the investor has been sitting out for a while. But the end user, I think it's a great time to get in, and I've been seeing a lot of end users coming in and buying their houses that they were eyeing for a while.
So you mentioned that cash flow isn't the best in Ontario right now. Your mortgage payment might be $4,000, $4,200, and the rent only might be, let's just say, $3,000. Plus, we are not even considering property tax and all other expenses, maintenance and whatnot. So that's where I think Calgary comes into play as well. Over here, the prices have gone up over the last couple of years, unlike Ontario, but there are still certain properties that can give you cash flow. And even on the brighter side, if you're even breaking even right now on a property, in the future when the interest rates start to go down, you would start to see that cash flow. Okay, talking about Calgary, I know that you lived here for years and that's where we met and struck a connection as well. Why did you move to Ontario? What opportunities you saw there? And secondly, are you planning to move back to Calgary?
Yeah, that's a loaded question. Why did I move to Ontario? I'm a big city boy. I'm originally from Delhi. Calgary, although I lived here for 6 years, I have very good memories from Calgary. I have a lot of friends, including you. The reason I moved to Ontario was because I like the big city. I like the hustle bustle. I like the competition as well. I think competition brings the best out of you. And even in the mortgage industry, I thought there was good competition. There was good avenues to grow. That's why I moved back to Ontario, where I came from. After 6 years here, I moved back in 2018. And so far, I like it. Never say never. I might come back to Calgary. As you know, I have a property here as well. And this is where I met my wife. So this is like a second home to me. So never know. I might move back to Calgary. But it's a great place to live, great place to raise a family.
So Puneet, talking about myths, there's another myth in the market that first-time home buyers are the only ones who can pay 5% down payment. We were just talking about it off camera and we discussed that this is absolute misinformation. situation. Could you explain that a little bit more?
If I had $1 for every time somebody told me that myth, I would be a millionaire. So a lot of people think that 5% down payment is only for first-time home buyers. It's a first-time home buyer incentive. It is not. It is a primary residence incentive. So you could be buying your first home, put 5%. 6 months down the line, you could be buying your second home. As long as you intend it to be your primary residence, you can put 5% down again. Again, you'll have to qualify based on income, your down payment, and your credit. Those parameters still stand, but at the same time, you can qualify. You can get in theory, you can get your second, third property at 5 or 10% down as well. It is not only a first-time home buyer incentive. You could be buying a second property as well, or third property for that matter.
So it's not a first-time home buyer incentive. That wouldn't be the right word for it. It's a primary property. It's a primary residence program. So Puneet, of course, in Canada, we get a lot of new immigrants. A question I get asked a lot is 3 months into getting permanent residency here in Canada, moving to Canada, there are immigrants that are looking for a house. They have questions about how much credit they need and what's the actual process of buying a house as new immigrant. Could you maybe give us a brief of the process of buying a house as a new immigrant?
So just kind of, there's always 3 things that go into a mortgage. There's going to be income, down payment, and credit. Let me start with the credit first. So there's a myth in the market that if you're a new immigrant and you don't have established credit, you cannot get a mortgage. That is incorrect. It's always a good idea to have credit established. If you're a newcomer, the best way to start would be to have a credit card. Go to a bank, go to Walmart, go to Costco, get a credit card, start using it, and that's the best way to. In about 2 months, you will have some credit established. But sometimes it can happen that the client is new and new to the country and they don't have credit established. At that point, there are programs. As an example, one program is called the Maple Leaf Advantage program, where if you're a newcomer, even if you bring your credit from your home country, as an example, India, Pakistan, wherever you're coming from, if the country of your origin has a credit bureau and they have established credit, they can bring in that report as well, and we can use that credit to qualify them. So sometimes if the client does not have any credit in Canada and their country of origin does not have a credit reporting agency, they can even bring a letter from their country of origin from a bank saying that this person XYZ had a satisfactory banking relationship with us. All that letter has to say on a letterhead is that they have satisfactory banking relationship with us. It does not need to tell them how much money they have, how long, basically pretty much how long they've had a relationship with them, and that should be it. And that is an alternative for credit. Down payment, sure, it's always a good idea to have the down payment within Canada, but if they're bringing down payment from any other source, any other country as well, that will work. Definitely they would need to have proven income, so pay stubs, T4 letter of employment, but as long as the employment has been there for at least 3 months and they're not on probation, we should be good. So it is definitely a myth that they have to be in the country for 1 or 2 years. So you can have served clients where they've been in the country for 3 months, 4 months, they like the house, they have the down payment, sometimes they build credit as well, sometimes not, but we get them qualified.
That's right. I've never heard somebody from mortgages or real estate in general explain it so well. A lot of people won't know that if they have good credit in their home country, they can use that to buy a house here. This just tells me that you are solutions oriented. There's a roadblock that, hey, somebody doesn't really have a lot of credit here. You went out there and found a solution from them. Over the years, we've worked together for almost a decade now. I don't think I've ever heard you say no to a file, except for, of course, if it's a complete no, that's a different point. But if it's something doable, doesn't matter how much the volume is, you usually find solutions for your clients.
Absolutely. And we understand how much emotions go into a home buying process for the buyers and for the realtors as well. You do a lot of legwork for the buyers, and sometimes a person sees a house and they imagine themselves living in it. So I think it becomes our ethical responsibility to make sure that we've ruled out all possible avenues, we've explored all the possible options, and the bank wants to lend money. The bank is in the business of lending money, and there are programs like that. So I would say it's always a good idea to run it through a professional, run it through an experienced mortgage professional, and there are a lot of policies for newcomers, for self-employed people, for investors, and they're always evolving. So I try to stay up to date with all the policies, and most times I think there's a policy where we can fit in the client and they would qualify.
Well, thank you so much, Puneet, for making the time and visiting us here. If somebody wants to reach out to you, what's the best way to contact you?
Well, I'll leave my number at the bottom over there, but you can reach me out at 647-216-5353. That's the best way. Otherwise, I'll leave my email address at the bottom as well.
Thank you so much, Puneet, and again, keep coming back. We love having you here.